Hello everyone. Hi. How you doing? In today's video, we're going to take a look at what the next steps are for the market. Why do I get things correct so much? It's because we look at multiple data points, multiple different factors all together. That's the best way to make a decision in anything. You need to look at everything. So in today's video, we're going to look at everything. We're going to look at the large tech stocks, the SP500, the NASDAQ, the VIX, the Russell related stocks. We're going to look at Forex. We're going to look at crypto. All of this combined. All right. So without further ado, hope you guys enjoy the video. Please make sure to like, comment, subscribe. Let me know what you guys want, what I could do differently, and how I could be better. All right. Let's get started with the video. All right. First and foremost, what I want to do is I just want to look at the seasonality chart for the S&P 500. So now what this is basically showing us, like I was saying, is July is a very, very bullish month for the overall market. This is the S&P 500 over the last 20 years on average. This is a chart of July. July does very, very well. It doesn't look like any weakness. And this was the first day of July. July tends to be very, very bullish. That's what I wanted to preface this video on. So now that we spoke about that, right? Great. What is currently going on with the market? I was saying that the S&P 500, the next target would be this uptrend level that we have been monitoring as well prior. So what we're going to do is we're going to look at why this trend line is so important and why I said we would end up touching the trend line. So if we go back in history, go back in time, this is November of 2023. This bottom right here, November 2023. This marked a very big turning point in the market where we saw a lot of buyers step in. And from here, we never saw these lows again. This was extreme buying pressure off the lows. Great. But what's interesting is that this acted as a level of support multiple times moving forward. So it acted as support back in August of 2024. We got a very, very perfect touch on this, right? Then it acted as support again. But what's interesting is that once the trend line broke as a level of support, because this entire time we were in an uptrend for years, right? Once this uptrend broke as support, the market tried. It really, really tried to retest and break above, but it couldn't. And that's when the weakness started. This is when the weakness started in March of 2025. So as you can see, great. We got a big move to the downside. We ended up going long down here. And now we are comfortably just holding on to our longs, not doing anything crazy, waiting for a move to the upside to continue. Now, the reason why I wanted this trend line to touch is because of the past. If a trend line has acted as support multiple times, and then it's clearly acted as a resistance multiple times as well, then it means that it's important. So this was very, very well defined as the next upside target. I was saying we would see 6270 to 6300. We didn't even get a pullback yet, which is also very, very insane. I was expecting a bit of a pullback, maybe for an opportunity for people to go long, but we didn't get any of that, which is very, very insane. And the other thing, just purely looking at the S&P 500, because generally when we're doing analysis, we don't just look at the S&P 500 plainly. You need to look at other factors. But if you're just looking at the S&P 500 in a vacuum, what we saw was that the S&P was consolidating at a very major level of resistance, the 60-50 level, which in the past has acted as the JP Morgan collar level of resistance as well. This was a very, very important level. Once we broke above and got two solid closes above this level, all steam ahead. That's why the market started to rally, because we saw strength above a major level that we were consolidating at. We're going to look at other large tech stocks that were also consolidating, that also popped upwards. And the overall market in general is going to end up doing this, in my opinion. These other large tech stocks are going to follow as well. So now we have a bit more to go to the upside. In my opinion, we should comfortably see another 1%, half a percentage move. But then once we start to reclaim this trend line, if we reclaim this trend line comfortably, imagine if we reclaim this trend line. This is a new all-time high comfortably. We're holding above all-time high. Even if we were to break down below, it's tough to just be increasingly bearish over the next month or two. Because even if we were to break above, have an abrupt move to the downside, the odds are still stacked to the longs. Even if something like this were to occur, where we were to fall, I would still really look for longs. I would just, the safest trade, in my opinion, would be to try to lean long. If we get a touch back down to 60-50 and something like this ends up occurring where we tried a long, it didn't work, tried a long, it didn't work, I would rather wait for a nice solid long opportunity down here at 60-50. That would be about a 5% drop. That would be enough for people to think that a bear market is occurring. But once again, I'm very convinced that over the next few months, the overall market should be bullish, because just this buying pressure is not to be taken lightly. This is all-time highs. We have all-time highs with extreme buying pressure. Banks and hedge funds are not retarded. They're not going to try to go long into all-time highs without any substantial evidence that the market is going to be forward-looking. The market is forward-looking. These people are forward-looking. They're not going to pump money into the overall market at all-time highs, not thinking the market is going to continue, right? So that's what I'm basically assuming. Even if something like this were to occur, we get a pullback, we make new highs, reclaim the trend line. Oh, we broke. Oh, cool. We might go short. But in general, longing 2-3 month out calls, 3-5 month out calls on these large dips, it's gonna work. I was saying down here back in April, just buy calls for 3 to 5 months out and enjoy your life. Our calls right now, our SPY QQQ calls are up 100 to 300% because we took really nice trades. We're super deep in the money. And you can't make that up. You can't fake results. And it just is what it is, honestly. So we were leaning long into weakness. You don't really want to lean extremely long into strength. But once again, if the overall momentum is bullish, right? If the overall momentum is, if the wind is in the, if the wind is blowing in a single direction, when the wind hits, right? Follow along that momentum. That's truly what it is at the moment. The momentum is very clearly bullish. It doesn't make sense to try to aggressively be bearish. All right, so that's that with the S&P 500. Let's take a look at the NASDAQ. Similar concept. The NASDAQ just skyrocketing up. This is just extreme, very vertical strength. And when the market is like this, you don't want to just try to short. You do not want to try to short the market when we are in a vertical line. It doesn't make any sense. If you do want to try to short, you wait for a breach of this trend line. And we haven't gotten that yet. We're going to be monitoring this trend line. We haven't gotten it yet. And we're going to continue to remain long. And what is the most bullish situation currently is that we are hugging the upper level of the Bollinger Band on the NASDAQ and the ES, and the upper level of the Bollinger Band is vertical up as well. So this is not to be taken lightly. As you can see, the upper level of the Bollinger Bands are not technically overextended because we're not opening and closing outside of the upper levels. So for example, if we were in the SPY, right? It's only been one clear day where we opened and closed outside of the upper level. And on the NASDAQ, we had two solid days where we opened and closed. This is not an automatic reason to just be extremely bearish. But, I mean, like, it's very difficult to start to really be long here, obviously. But the momentum, this is not a joke. The momentum is very bullish. I'm telling you. In the short term, there's going to be bearish setups. Obviously, looking at this, clearly looks overextended. We're going to look at other large tech stocks that are starting to really look overextended. But my argument is for years, right? We've been trading for years. We are trying to catch every single up and down move. We end up being incorrect, but our gut inclination, what is the gut inclination? The gut inclination right now is that the market should rise. When it rises, it doesn't really matter as much because we can be patient and take the best trade. Instead of trying to catch every top, instead of trying to go short over here, oh wow, oh the market should drop. Let me just zoom in here. Oh wow, the market should drop. Wow, the market is going to drop. Let's go short. What happened the next day? Gapped up. Oh, it's definitely going to drop here. Oh, let's go short again. What happened today? Over the weekend. Oh, it's definitely going to drop over the weekend. What happened? Gapped up into new all-time highs. So wouldn't it make more sense to just wait to be bearish? There's two things you could do. Instead of trying to be early and try to stand in front of a freight train of momentum and try to be early like you're Spider-Man. You want to stop a train, right? You're not Spider-Man. We're not Spider-Man. When the train is coming at us, you have to step out of the way, grab alongside of it, and go for the ride. Once the train starts to slow down, that's when you can start to, once the train starts to slow down, right? Once we get some sort of weakness, once it's clearly overextended, but once we get to some sort of weakness, we get a bit of a red candle here, maybe then you could start to be a bit bearish. Right now, I would rather just play alongside momentum, wait for pullbacks, and go long. Okay? There's multiple reasons why I am like this as well. It's not just based off of these two charts. What we're now going to do is we're going to look at the large tech stocks as a whole to show you that there is still a lot more room to the upside for a lot of these other large tech stocks also. Number one, let's take a look at Google. So I posted on Twitter that I think Google and Apple would do well. I also made a video about last week saying that Amazon would also do very, very well because these are loser stocks. These are stocks that are not at their all-time highs, that have a lot more room to go. So what we saw on Google is I made a fib level from the recent all-time highs to the recent lows, and we are comfortably holding above the 50% fib, which is important. It's an important level of support. Now, I also said that we would see above 184. Once we see above 184, we're going to see 190 and then potentially 200. So this is currently a downtrend with multiple this is multiple touches on a downtrend. Right? You can clearly see we gapped up above it and then today we closed down below it. Not an alarming situation because I don't expect us to just break above in 1 week, right? Regardless of what happens, overall, I'm bullish on these setups because there's a lot of upside potential. This is also clearly an uptrend. We're here at this level of support, even if it breaks down below. All of these are still good buying opportunities. This is what I'm thinking. This is how I'm looking at things. Okay, it's very simple. If the SP 500 is at all-time highs, if the NASDAQ is at all-time highs, Google, one of the Mag 7 best AI-related stocks, trillion-dollar company. Google, when Google moves, it moves the market. Google moves the other large tech stocks as well. When the S&P, the NASDAQ are at highs, all-time highs, if Google is lagging like this, if Google gets its act together and starts to show strength, the overall market is going to have so much more room to go. Okay? That's my thought process on why I think the overall market has much more room to go. Case in point, number one, Google. We could also take a look at Apple. Apple was another one. Similar situation. Loser stock. I made a fib level from the recent all-time highs to the recent lows. We're holding above the 22.6% fib. Today, coincidentally, right after I tweeted, well, what do we see here? We jumped up almost 5% intraday. We ended up closing 2% for the day. And now we closed above the 38.2% fib. Setting up beautifully. Bull flag. Great situation. Most likely going to see above 215 on Apple. If Apple starts to rise, if Google starts to rise, Amazon, another stock. I was bullish on Amazon back here June 25th on this red candle. I was saying Amazon, beautiful setup. Beautiful, beautiful setup. Bull flag. Great situation. Awesome. We were looking at Amazon right here. I was saying this is going to rise and we're going to see above 220. What ended up happening? All of these stocks that are losers are starting to see strength. And once these stocks, the loser stocks that are lagging, start to do well, the overall market is going to continue to do well and it's going to continue skyrocketing. Because number one, the main concept that we need to understand is that there are profit taking and there are reinvesting into losers for a higher percentage return. Okay? So, profit taking. Let's talk about that. So, for example, NVIDIA, right? So, NVIDIA is a leader, right? NVIDIA is a leader. When you see a leader doing very, very well, right? So, for example, a couple weeks ago, 2 weeks ago, we saw NVIDIA consolidating at 144. Clearly huge winner. AI, sweetheart, best bullish stock that we've seen basically all year, right? For the past few years, NVIDIA, right? Consolidating at a level of resistance. Consolidating. What was happening during this time? Money was flowing into other large tech stocks to give them some room to go to the upside. We were consolidating at 144. Once we got closes above 144, skyrocketed up on NVIDIA. AMD. What was AMD doing? Consolidating at 129. Closed above 129. All right. Closed above 129. Gapped up. Started to show extreme strength. And what was AMD? A loser that ended up catching a break based off of NVIDIA. A loser stock that got some buyers. Because what? What was the reason why these stocks now just started to get buyers? Is because the overall sentiment and the overall market became bullish again. So what are funds and managers that manage hundreds of billions of dollars going to do? They're not going to be trading 0 DTE contracts on the SPY or AMD. They're going to be putting in lots of large orders on actual stocks, right? So they're going to look, okay, cool. If we go long AMD here, after this big move, we might see 5 or 10% on the trade. 5%, 133, 134. 10% ended up being 140. This was a really, really good risk-reward trade because it's a loser, right? A lot of these other trades that are really, really good right now is because they're losers and the overall market was very, very bullish. So if the overall market is bullish and these magnificent 7 large tech stocks are not doing well, that means that these stocks are going to catch a break and start to do well. Very, very simple. Okay, so once again, Apple, loser stock. Same concept now, right? Same concept. It's a loser stock. It should be doing well. Because if the overall market is going to continue doing well, Apple has more room to go. And it's going to bounce. We should see above 220 on Apple. Google, loser stock. That's why Google should be bouncing as well in the next coming weeks or months. Loser stock has more room to go. Does that make sense? Tesla, you could even make the argument with Tesla. Same shit. Loser stock, holding support at 320-ish area, holding above 312. Loser stock. Trading around the 38.2% fib from the recent all-time highs to the recent lows. Same concept. So the money is going to flow from the winners when they consolidate or sell off. The money is going to flow into these losers. Okay? I hope that makes sense. Take a look at Microsoft. Another solid winner. Completely just in a complete vertical uptrend. Not giving any opportunity to go short. When NVIDIA, the NASDAQ, Microsoft, Meta, vertical line, opened and closed, gapped up into the above the upper level of the Bollinger Band. It's not like it hasn't done this before. It's done this multiple times before, where we got a bit of a pullback right here, back in January, skyrocketed up into new all-time highs again. multiple times again. We skyrocketed outside the upper bands, pulled back a bit. Look at where we are now. When you see this amount of buying pressure, yes, it's difficult to go long, but this is not an automatic reason to be short. There's no structure in any of these stocks that show, oh, wow, this is a triple top. Wow, this is a good reason to go short. It's just you're trying to just short strength. You never want to get caught trying to short strength just for the sake of trying to short strength. You don't want to be a contrarian. You don't want to just try to catch a top. You don't want to just try to catch a top in anything, because this is just not something that is conducive with a good trading strategy. It's much easier to try to catch a bottom. Much easier to try to catch a bottom than it ever will be to try to catch a top. Trying to catch a bottom when the market is overextended algorithmically in terms of its Bollinger Band, you can guarantee that funds are going to look for these as good buying opportunities. If you just buy out for a few months out on your contracts, great high risk reward chance that it's going to continue. Okay? You have multiple chances to take profit. Very, very difficult to do that when it's on the upper end of the Bollinger Band and to try to catch a top. Okay? Netflix. Another one. Netflix. Why would you try to go short on these stocks when they are so strong? So now that you guys are basically seeing what I'm looking at, right? The fact that Netflix, Meta, Microsoft, these stocks are doing so well, NVDA, AMD, it shows you that number one, what does it show you? What does it show you? It shows you that the overall market is very, very bullish. If the overall market is very, very bullish, it means that the other stocks that are not doing well are also going to be bullish. Google, Tesla, Apple are going to get a bid. They're going to start bouncing. Once these stocks start to consolidate or start to show weakness, Apple, Microsoft, Tesla should also be a bit bullish, because they're going to try to catch a bid. Money is going to flow out of the losers and money is going to flow out of the winners and into the losers, so that everyone can maximize profit. You're not just going to throw all of your money into all-time highs on Netflix. You're going to look to sell some Netflix. You're going to have a small position in Netflix still, but you're going to also want to start going long into Apple, Tesla, and Google. Does that make sense? That is currently what I'm assuming is going to end up happening with the market. Case in point, because it ended up happening on Amazon. So because Amazon looked really, really good and the overall market looked very, very bullish, I knew that Amazon had a very, very high chance of bouncing as well. That's why I posted the tweets that Google and Apple would also do well. And we are in that process. Apple had a really, really good day today. And Google actually gapped up above the trend line, closed below it. 2 solid days on these stocks. So that's what I wanted to show you guys on the large tech stocks end. What is also really, really, really important is the Russell 2000. So the IWM and the Russell 2000 are very, very important in terms of market movement as well. These stocks are economically sensitive. The stocks in the Russell 2000 are economically sensitive stocks. They move based off of when the economy is sensitive, right? So if you're looking at coin, skyrocketing when coin is doing well, when hood is doing well, skyrocketing when the financial sector is doing well. These are all IWM related names. When these are doing very, very well, Uber, when these are doing very, very well, it means that the overall market has more space and room to grow. It means that the IWM is also going to do well, because technically, what is the IWM right now? It's a loser compared to the SP500 and the NASDAQ that are at all-time highs, trading at all-time highs. The IWM has a lot of room to go to the upside. Do you understand? If the IWM is also at an all-time high, if all of the large tech stocks were also at all-time highs, then it becomes a bit scarier to be overall bullish. But because so many of these stocks have so much upside potential, to get to the all-time high on the IWM, 13%. There's a lot of upside potential. Sorry, not even 13%, more than 13%. But regardless, you guys get my point. To get to the November highs, 13%. So there's a lot more room to the upside on the IWM, and it's a really, really good sign that the financial sector, the industrial sector are all doing very, very well. Okay? So all of this ties together. That's why it's very, very important to look at these things on a daily basis, because that is the only thing that opens your eyes to the patterns and things that are supposed to be happening and how you can really make a proper decision. To wrap this up, I really want to show you guys the VIX. And the VIX is very, very important. We've been monitoring the VIX. And once again, just to really, really drill it home, the levels that we're monitoring on the VIX are $17 and $20. Okay? And the reason why the $17 level is so important, and the reason why the VIX is so important, is because the VIX has an inverse relationship to the market. If the VIX is trading below $17, inverse relationship, what does that mean? It means that if the VIX is falling, it means the overall market should be rising. So if the VIX is weak, showing weakness below major levels of resistance and support, it means that the overall market is strong. And that's what we've been seeing. We've been seeing the VIX is weak. That's why the overall market is at all-time highs. Does that make sense? The overall market is at all-time highs. I'm an artist. That's a work of art, actually. But the overall market is at all-time highs. And the VIX showing a lot of weakness, right? Does that make sense? So all of these things need to be put together. And I hope this really, really makes sense. I truly, truly do believe in the next few months, the overall market is going to continue 2-3 months down the line. I'm not bearish. I'm not bearish on anything. I'm just going to continue buying dips. I'm going to continue leaning long. Any sort of dip buying opportunity, 3, 5, 7, 10%. These are all dip buying opportunities. 2025 is not going to be a time, in my opinion, especially in the next quarter, especially in the next 4 months, is not going to be a time where you want to start aggressively leading short and thinking, oh, wow, 2025, we're going to or a bear market. This is not going to happen. In the next, let me show you guys a chart of the SPX, okay? Oh, wow. I didn't even see the chart of the SPX. This is kind of crazy. We're actually at the exact level of resistance, which is a fib extension from these highs. Well, we'll see how this plays out, but this actually stopped pretty perfectly on a level that I was monitoring. Let's see. Wow. Anyway, I can't really do anything about that. Anyway, my point is that I don't think the overall market is going to get a big, giant, just bearish pullback, and we're going to end up being in a bear market in the next few months. It's not, in my opinion, it's not going to happen. We saw conflict in the Middle East. We saw Iran close the Strait of Hormuz. We saw like literal conflict between Iran and Israel. The U.S. bombed Iran. That didn't scare the market. There's tariff talks. Trump is imposing tariffs, all kinds of talks on Japan, China, Europe. That's not causing any issues in the overall market. We're at all-time highs, and we're continuing to make highs. So this, once again, guys, I don't think this is going to be a time where we see any sort of like 20% pullback in the next 10. I don't even think we're going to even see a 10, 15% pullback in the next 3 to 4 months. If we do, I'm buying all of these dips, and I'm going to be very, very long. I'm going to be looking for dip buying opportunities. Is this a time where you want to start leaning aggressively long? Absolutely not. I would rather wait for pullbacks. But trying to go short is also really, really risky. I think there's two things going on right now. it's probably 50-50 at this point. Going long up here or going short up here, they're both 50-50. And I would rather just wait. I would rather wait for levels of support. And at these levels of support, they automatically just increase to at least 70-30, long to short. And as you get weaker and weaker, the odds of a bounce become increasingly stronger. Because, once again, the strength that we're seeing out of these large tech stocks is not fake. This is not a just fake retaliation sort of bounce. This is a V-shaped recovery into new all-time highs, guys. Okay? Hope that makes sense. Next, let's go ahead and take a look at gold and Forex. All right, number one, let's take a look at gold. Okay, so this is an uptrend, clearly an uptrend from back in the beginning of 2025. Multiple touches, acted as perfect support here. What is this? Another one? Another perfect support. Multiple times where a trend line has acted as a level of support. Now, what just recently happened on gold is that, yes, we were holding this trend line. Oh my goodness, we skyrocketed up, retested, tried to break back above the highs. We couldn't, and we ended up breaking lower. Now, what's going on right now is that we finally got a close below this trend line in a year. Okay, so what we are currently looking for is we want to see a close back above this trend line if you're bullish. If you're bearish, this becomes a very good opportunity to be short on gold. Why is that? Because we have just now started to break below a major trend line. Generally, what you also want to see is you want to see two closes below a trend line for a guaranteed continued move. We got one close, right? This is not an entire close below the trend line, but it's similar. It's there. So now, do I want to be aggressively bullish on gold here? Absolutely not. Does it make more sense to be bearish? Yes, in my opinion. It makes more sense to be bearish on gold as long as we don't close above the trend line. And what bears definitely don't want to see is a close back above 33.50 on gold. We're about 50 points away on gold at the moment, right? But this is setting up for some sort of a bearish move, and it would make a lot of sense if we even see 3,200 or a retest of this area down here, because the momentum is now shifted a bit bearish. If this fails, if this trend line fails, we're going to definitely see 3,150, 3,200 on gold, and it's just the way the cookie crumbles. Gold is not really relevant. It's that there's better opportunities in trying to long equities than it is gold right now, because the overall market is starting to recover. Gold was only doing really, really well because there was some tumultuousness in the market. And as you can see, the SP500 started to rally, right, around the same time as gold started to decline. So it makes sense, right? So right here, this is also a pretty bearish situation on gold. Gold should continue falling. What does that tell you about the overall market? It's another indicator that the overall market should continue to rally. Okay, so I hope this makes sense. Gold, sticky situation for gold here. Next, we're taking a look at the monthly chart on the British pound dollar. And you can see we have just recently broke above major downtrend levels, okay, in the past few months. So this is back in 2007. This was a downtrend that was created in 2007. Multiple touches here in 2021, and then down here it acted as support and resistance all throughout 2023, 2024, and 2025. Spectacular. Another downtrend level from back in July 2014 acted as clear resistance over here in 2021, and then once again similar situation, just lots of touches and lots of support being held, but eventually, finally, we broke above and started to climb. So now let's take a look at the weekly chart. So the weekly chart is giving a bit of a better understanding and show, right? So clearly, so you can see that we held these trend lines, and there was no real pullback. It's just been a constant grind up, because after being so beaten for over a decade, now that we're starting to climb back up, a lot of pullbacks that normally would be happening on any, in a safe environment are not happening as much. There's not as many good opportunities to go long into levels of support, because we're not even retesting levels of support, because it just goes to show that there's so much buying pressure in this that it's not really giving us an opportunity to do it. So one thing that I did was I made a fib level from the highs of 2021 to the most recent lows. First of all, we haven't even broken back above those, but then we have a lot of upside potential, because two things: we just broke out of a downtrend, and we're also in a nice solid uptrend that also has multiple touches. So we made the uptrend from the lows in October 2022. And then all of these are touches. This is the weekly time frame. This is the weekly time frame. This is not, this is a few days of touches. This is a few weeks of touches and holding this trend line. So it goes to show the veracity and the importance of this trend line, right? So once again, we're in an uptrend. The uptrend level is still maintaining itself. We're in a very sharp uptrend, similar to what's going on with the NASDAQ and the overall tech stocks, right? Things look very, very bullish on the pound US dollar. So it's really tough to be bearish. I do think that if we can continue to hold 134.90, this can continue rising. And we should be able to see a new break of 142.34. And then we could see 150. We can honestly see 150, and this is very, very bullish in my opinion. Next, this is a monthly chart of the Euro USD. A bit more of a dirtier chart, a lot more fib levels, but same concept. We had a downtrend level from 2017, multiple touches back here in 2021, and then it acted as a level of resistance. Same concept as the bound, right? And then another trend line from 2013. Lots of touches in 2021 and 2020. And same concept. Literally almost very, very similar, almost the exact same situation here. Okay? So once again, this is the weekly. And we just a few weeks ago broke above these. And we are just now starting to create a bit of a vertical trend line. So there is a lot more room to go, in my opinion, on the Euro USD. We have a lot of resistance here at the 38.2% fib from the highs to the recent lows, right? I made a fib level from the highs to the lows, not to confuse anyone, right? So this is one fib. And that, based off of that fib, the 38.2% fib is at 120. And, right here, we are almost headed towards 120. So that is the next target to the upside, in my opinion, for the euro. And things are really, really gearing up for a continued bullish move, in my opinion. It's really, really tough to be bearish because we're just continuing to churn upwards and just chug upwards. We might have a bit of a red day, but there hasn't even really been any dips on any of these Forex names that we just saw. Well, we only saw two, but these two have not given any sort of solid dip opportunity. So just keep that in mind. It's very, very important. And, there's money to be made here, especially to the long side. I don't think there should be a shorting opportunity anytime soon. We are clearly very, very comfortable in an uptrend. And until these sharp uptrend levels start to break, there's no real reason to try to be extremely excessively bearish. We're not there yet. So it's the same concept as trying to short these large tech stocks that are doing really, really well to try to catch a top. This is not the market environment to try to catch a top, okay? Because the Forex environment is multiple times bigger than stock market. So trying to catch a top in the stock market is hard enough. You don't want to try to catch a top in the Forex market because generally it's not going to work as easily. Okay, especially when you see that we're trading outside of the upper level of the Bollinger Bands so heavily and so comfortably. This stuff is not to be taken lightly. So I hope this made sense. And now let's go ahead and take a look at crypto. All right, number one, Bitcoin. Bitcoin looks bullish. You cannot be. How can you look at this setup? How can you look at a bull flag holding above 104, 103,000, holding above 1,000 or 100,000? Even if Bitcoin drops down to 100,000, what we just saw on the overall stock market, what we just saw overall with the VIX, how can you be bearish on Bitcoin right now when things are looking very, very good? One of the main key things to look for when you're trying to deduce and try to do technical analysis on Bitcoin is you also need to look at other large coins, right? But just purely from what we can see on Bitcoin. What is this? This is a bull flag. We're holding resistance here, but it looks very, very bullish. What you could also do is you can make a Fibonacci level from the most recent highs to the most recent lows. You could see that it's about to break above the 786% fib. The 786% fib, once you break above that, it's essentially, once you break above the 618% fib on any sort of situation, the odds of breaking above and making new highs tends to end up being 70% or so. So there's a very high likelihood chance that even if we hold above these 105, 103 level, even if we get a pullback, every dip is a good buying opportunity, in my opinion. Just purely based off of how much buying pressure that we saw. If this was not a good buying opportunity, why, when you finally got some sort of a pullback, oh, we are at 110,000, this is the top, oh, we're going to pull back, why did it bounce off of 98 only to return back up to 109? If it's bearish. It's not bearish. This is not a bearish situation, in my opinion. And I hope this makes sense, because this is just gearing up for a large move to the upside. After 112, we're going to see 115. We're going to see a fib extension here to 118. Then we're going to see 120. Very, very simple. And a lot of this has to do with how good the setups on Solana and Ethereum are. So first, I'm going to look at Ethereum. So Ethereum is clearly lagging, right? We are nowhere near all-time highs on Ethereum. Ethereum has how much percentage to the highs? About 65% to reach the most recent highs, okay? And to make it to the all-time highs, it's even more. But there is a large risk reward for Ethereum. Ethereum is also getting a lot of love in the institutional space, as well as Solana, because it's starting to be able to trade. People are starting to be able to trade the futures on US exchanges, which is very, very big for adoption, and it's very, very big for the overall market sentiment. It's also very important that most large hedge funds and banks put a percentage, not just in Bitcoin, they also put a percentage of their portfolio into Ethereum and Solana. BlackRock also publicly stated that they are very, very adamant about pursuing crypto. So when all of these things are aligned, you have to be bullish on the market. It does not make any sense to, never really made any sense to me to lean bearish on crypto. In the short term, sure. Ethereum does look like a piece of crap. It looks really, really bad. But the fact that it looks bad when Bitcoin looks good, it doesn't really look bad, right? But it's consolidating and it's making a bull flag. Very simple. We're holding above the 38.2% fib. It's not a winner, right? There's a lot of room to go to the upside. And once we break above these uptrend levels, downtrend levels, as you can see, this is a downtrend. We retested it down here. We wicked at it perfectly. Sorry, my artwork is not great. We wicked down here perfectly and ripped upwards. Now this is a buying opportunity and the momentum should continue. We should see above 3,000 on Ethereum, above 3,100 on Ethereum. Looks great. This is not a bearish situation on Ethereum. I would be very, very shocked to see Ethereum make new lows. It's almost impossible. I don't think that's going to end up happening. Okay, so that's that on Ethereum. Solana looks even better. We were looking at Solana the other day. Solana looks great. We were looking at Solana over the weekend. Yes. This is a really, really good setup. I was begging people to go long. I'm still begging people to go long. This is a really, really good opportunity to go long on Solana. And if Solana has such a high percentage return still to get to the most recent highs, that's a 90% return from the most recent highs from January. Does this look like a time to start being wary? Would you rather try to go long at 120 and miss a 100% move? Would you rather try to wait for it to dip below $80? Does that make sense? Oh, it doesn't make any sense. So if Solana and Ethereum are really, really trying to bottom themselves out after extreme weakness, they're trying to create a higher low. At the higher low is when you start to lean bullish. So at the higher low on Solana and Ethereum is when you start to lean bullish on the overall crypto market, because Bitcoin is at all-time highs. Basically, it's at highs. So when Bitcoin is like this, and Solana is trying to bottom out, Ethereum is trying to bottom out, you got to lean long. You have to lean long, in my opinion. And that's currently what's going on. And that's what I think should continue, because just, once again, you just look at the overall market. The S&P 500 is going to continue rising. It's going to hit this trend line. We might get a pullback soon, etc. But in the next 2 to 3 months, I am extremely, extremely bullish on the overall stock market. And because the overall stock market should be bullish, crypto should be bullish as well. And especially crypto. So the main other thing that I really want to drive home is that these crypto names are doing well. You also have to look at the Russell 2000 and the bank-related stocks in the Russell 2000 to see how they're doing. What is the XLF doing? The financial sector of the S&P at highs. When these are at highs, when freaking Robinhood is at highs, when Coinbase is skyrocketing, sitting at highs, this is not a time to be bearish on crypto. You have to look at everything all in conjunction, because this is how you do analysis. So I really, really hope this makes sense. And then last but not least, you got to look at the VIX, right? The VIX has an inverse relationship to the market. When the VIX is rising, very, very simple. When the VIX is rising and doing well, the overall market is going to be bearish. That's not what we're seeing right now. The VIX is falling. When the VIX is showing weakness, that means the overall market is going to be rising. If the overall stock market, right? If the VIX remains below $17, if the VIX remains below 17, that is bearish for the VIX. If things are bearish for the VIX, then that is very, very bullish for the overall market. And if the overall market is bullish, if the S&P 500 is going to continue being bullish, even if we get pullbacks, etc., but if the S&P 500 is bullish, crypto is bullish. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe. Let me know if you guys like these longer form videos. And maybe at the end of these videos, I'll also go over some news or macroeconomic news, some sort of anything. So just let me know what you guys want if you guys enjoy these videos. All right. Hope you guys enjoyed. Have an amazing rest of your day. Take care.